Well, hi guys, good morning. It's a Friday morning, it's Friday the 13th, but looks like it is going to be a positive one and a lucky one for the market, given the fact that we hit a fresh high in yesterday's session. In fact, the Nifty also crossed that 25,400 mark for the first time ever in late hour surge. Will the up move continue? Will the momentum continue? Can we clock 25,500 this Friday the 13th? Well, that's the big question. And of course, we'll be posing that question to our technical analyst as well, who will be joining us shortly. But global cues are fairly mixed. Wall Street clocked a fourth straight day of gains, but Asian markets, were a little iffy. The Nikkei was trending lower and the Kospi was extremely flat. But the GIFT Nifty giving positive signals, so we may be in for a good start for our markets as well. But of course, lots of stocks in focus. We have the Adani Group also in focus in light of fresh allegations in the Hindenburg case. Of course, there's a clarification coming out. We'll be talking about that. We'll be talking about all the other stocks in focus. We'll also be taking up all your stock related queries. So if you have any queries, don't forget to send them in to us on our YouTube feed. We'll try and take them up. But before we move any further, let's take a look at the top headlines at this hour. The S&P 500 and Nasdaq rise for the fourth straight day as investors continue to anticipate rate cuts from the Fed when it meets on the 17th of September. Producer prices, in fact, in August rise slightly above estimates, although grew to 0.2% on a month-on-month basis. Asian markets trade largely higher following a strong handover from Wall Street, but the Nikkei and Kospi were trending lower, just a few minutes ago. The GIFT Nifty, however, is suggesting a higher start for the Indian market. Meanwhile, European Central Bank has delivered a 25 basis point rate cut, its second for the year, as economic growth slows and inflation cools. Gold prices hit an all-time high as the European Central Bank cuts interest rates. Crude prices rise, with Brent trading above that $72 a barrel mark as Hurricane Francine disrupts production in the Gulf of Mexico. And inflation in India accelerates marginally in August to 3.65% as food prices remain stubborn. Economists fear core inflation could hit 4% in the near term. Meanwhile, industrial production picks up pace with 4.8% growth in the month of July. Well, let's then take a look at the cues for trade then. Yesterday, of course, late hour surge, sent the Nifty to record highs. Even the Sensex, in fact, crossed that 83,000 mark for the first time ever. Of course, it was, the weekly expiry yesterday. And, allocation for Bajaj Housing IPO also happened, right? And that freed up a lot of, money. So perhaps that money also was plowed back into the market. But the Nifty ended slightly above that 25,350 mark. Nifty, Sensex, Mid-Cap Index, all three indices, closed at record highs. Heavyweights including Reliance Industries, HDFC Bank and IT majors lifted the Nifty to record levels. 25,400 on the Nifty was crossed for the first time, as I mentioned, and 83,000, that also became a reality yesterday. All the sectoral indices ended with gains yesterday. And, if you look at the FNOQs, for the September series, the Nifty open interest was up 9.9% and added 13.2 lakh shares. The Nifty September futures, is trading at a 32.6 point discount vis-a-vis a 20 point premium. The bank, Nifty open interest was down 11.3% and it shed somewhere around 2.7 lakh shares. Talk about Nifty PCR. It jumped significantly to 1.43 vis-a-vis 0.8 in the previous session. And talking about the stocks that will be in the futures and options ban list today, the new entrant is Granules India. Of course, it saw deep cuts yesterday on the back of US FDA Form 483, that it got. And, the stocks that will continue to be in FNO ban are the likes of Aarti Industries, Aditya Birla Fashion, Balrampur Chini, Bandhan Bank, Chambal Fertilizer, Hindustan Copper as well as RBL Bank. Good news is that FIIs remain net buyers into Indian equities. 7,600 crore worth of equities bought in the cash market, but DIIs or domestic investors were sellers to the tune of 1,800 crore rupees in the cash market. But of course, on that note, let me bring on board our guest for today. The technical guest who's joining us is Raja Venkatraman, who's the founder co-founder rather of Neo Trader. Raja, great to have you on the show. Of course, good news all around. We still have the Fed rate cut to watch out for. But before that, or even before that could happen, we've hit a fresh high. A lot of technical analysts that I spoke to were ruling out record highs, but it happened yesterday itself in the last hour. It's 25,500. Do you think this Friday, the 13th, we can get lucky and top that 25,500 mark as well?
Yeah, good morning, Nandita. Thank you for inviting me to the show. And if you just go and take a grab at the last week's session with you on last Friday, I had definitely said that we will definitely see a much better uptick in Nifty. And I'm glad that my viewpoint came right. And we are standing on the crux of crossing 25,500. So, yes, 25,500 continues to be a very important spot. But then my view continues to remain unabated on the buying side, and the dips were to be bought into. And yesterday, what we saw was the Nifty expiry and the short covering, which happened at lower level because most of the participants are waiting to short the market while overlooking the other factors that are in line with the market sentiment, which is the bullish side. So, what has happened right now is some short covering action. I'm very sure that. The shorts are still there in the system, and what's going to happen is that there is going to be a massive rally of short covering when bank nifty comes into the fore, because bank nifty has been on the sidelines, and I'm keenly watching bank nifty because that's shrugging off all the negative bias, and slowly and steadily it is building up. And I'm sure that within the next few days you'll be seeing a rally from the bank nifty. So on the upside, I had cautioned 25,500 as an upside, so that continues to remain important level to watch out for, because post that the next stop is at 25,800. So we have a good move uptake in bank in Nifty, and to move Nifty towards 25,800, it will need some support, and that's about I'm expecting from Bank Nifty. And for Bank Nifty to do that, it has to cross 52,000, because 52,000 is a critical resistance zone, which has been holding the bullish enthusiasm in Bank Nifty. Now, certain banks have started participating. The associated real estate, auto, and the NBFCs have started participating. So there is a group enthusiasm now to push the bank nifty higher. Now, with the rate cuts on the cards and some positive triggers already emerging from, say, China, ECB, etc. So now RBI may also follow suit, and if Fed also follows suit, so then we may see some positive vibes coming in. So, like I've always maintained, stay on the long side, use the dips to buy into, and I'm glad that my opportunities and my view came out right. I'm sure that those who watched our show will definitely would have profited.
All right. Of course, it was a massive short covering rally yesterday, and the next big push, according to Raja, could come from the Nifty Bank Index. But since we are talking about the bank index, let's talk about HDFC Bank. That was one of the heavyweights that moved yesterday. 1674 is where it's at, and the stock has been stuck between that 1600 to 1650 level for quite some time. So, do you think it has the legs to cross that 1700 level anytime soon? Now that banks may have started participating?
Yeah, so HDFC Bank has been spending quite a bit of time in a consolidation phase. You can say almost 3 months in this narrow range. And I feel the time is due now for HDFC Bank to rise. And I envisage a target towards the first target would be towards 1730, and the next target would be towards 1790. So these are two targets which I'm envisaging in HDFC Bank. Is definitely at a low risk zone, and if HDFC Bank moves, then what I said earlier would definitely come true.
Okay, that's the view on HDFC Bank. But another group of stocks that will be in focus is the Adani group of stocks, right? The group has strongly refuted allegations that Swiss authorities have sequestered bank accounts linked to the group as part of a money laundering investigation. Now, according to a report by investigative news website Gotham City, Swiss authorities froze more than $310 million across multiple Swiss bank accounts as part of the investigation into entities allegedly linked to the Adani Group. Now, Adani Group has called the allegations preposterous, irrational and absurd. The group further added that the latest allegations are another attempt by the same cohort to damage its reputation and market value. there could be some reaction on stock prices. But what would you, or which stock would you be watching out for particularly when it comes to the Adani group of stocks? Adani Ports, that's one stock that a lot of technical analysts and other experts also talk about, that it's the best poised within the Adani group of stocks. What are your own thoughts?
Yeah, so when you talk about the Adani Group and when you talk about some active counters, so Adani Enterprise and Adani Ports are two of the most actively patronized stocks. Now, Adani Enterprise and Adani Ports are in two different zones, but both of them are languishing at the moment. So now we need to see some more further interest developing in this counter. So it's not at any kind of exact support zones, or it's not in showing any kind of momentum here. So I would wait and watch, because over the last, I would say, few months, these stocks have not been in alignment with the kind of views that are getting formed. So I would wait and watch. Yes, they were having some very good moves in the heydays, but then over the last 4 to 5 months, they have not really been generating some returns for the traders. They are mostly trading stocks, but I find that it's best to wait and watch how the market reacts to the news.
Okay, wait and watch. But of course, there could be some reaction on stock prices as a result of this news flow. But let's talk about some IT names as well. They were in fine fettle yesterday. Of course, they have been buzzing for quite some time now. And of course, once the rate cut cycle kicks in, they will once again be in focus. Because that would mean some bit of recovery in discretionary spending that has been pending in the US, right? But HCL Tech in particular today has acquired a 100% stake in Zena SAS France for 23.9 million euros. Now, this with this latest acquisition, of course, there will be some bit of focus on the stock prices. But within the pack now, Infosys, TCS, HCL Tech, a lot of brokerage houses have shown interest, or have in fact bullish calls on HCL Tech in particular. On this particular counter, what is the kind of resistance level one should watch out for?
So at the moment, the way HCL Tech is showing its trajectory, it's clear that there have been some pent up bullishness which has been released, and once it crossed the 1700 levels, it has gained more traction, and every dip has been a buying opportunity. So from here on, if you are an investor, you could look at target towards 2000 within the next 3 months. And as a trader, you could trade it as a multi-day play, because the setup is definitely encouraging, and one should look to trade into HCL Tech today.
Okay, look to trade into HCL Tech. But what about some of these hospital names, like KIMS for one, and Global Health as well. HSBC has initiated coverage on some of these hospital stocks. Anything that's looking interesting on the charts, even Narayan Health for that matter. If one were to trade in any of these counters among the three, which one would you choose?
Yeah, so Narayan Hridayalaya has been definitely showing some momentum in the last few days, and I feel that the levels of 1400 would continue to be an important point to track. So, if you are an investor, you can look to buy at current levels, because momentum has already started, and above 1400, definitely you should add more, because the targets are opening up towards 1800. So, Narayan Hridayalaya is a much better play than Kings.
Okay, Narayan Health, much better than KIMS. But, before we head into market, in fact, markets have actually opened up. I'll just come back to you, Raja. It's a quiet start after hitting fresh highs yesterday. The bulls seem to be taking a little bit of a breather, right? Not a very bad start, but it is a 25-point downtick on the index, and even the Sensex is down just about 80 points or thereabouts. But the mid-cap index is managing to hold out, 0.3% kind of gains coming in on that particular index. But in terms of other sectors, want to see what the bank Nifty is really doing at the current juncture. Quiet, 51,700, that holds for now on the charts, but it's quickly recouping most of the early losses as well. So just about coming into the green as we speak. But I also want to see what other sectors are up to, particularly the IT pack. Okay, even that's trading with a negative bias. Autos, banks, FMCG, IT, all of them, trading in the negative zone. But what's holding out is the metal pack. That strong 0.6% kind of a gain coming in there. PSU Bank Index as well managing to hold out. PSU banks have been in the throes of a sell-off in the past few sessions, but today seems to be bucking the trend. Realty as a pocket also doing well, up somewhere around 0.5% or thereabouts. India VIX has cooled off slightly below that 13 level for now. And but if you look at the advance decline ratio, it's firmly in favor of gainers. For now, it's 3:1, the advance decline ratio, 1480 advances to under 500 declines, which is not very bad, but of course the picture will get a little clearer as we progress through the day. But for now, mid cap index holding in the green and the breadth is looking fairly strong. In terms of individual movers, Bajaj Auto continues to do well. The stock has been on a tear, and there's no stopping this one. Top Nifty gainer as we speak. Metal counters, no points for guessing among top Nifty gainers. So Hindalco, JSW Steel, Tata Steel all on the gaining end. Wipro also continues to gain, even though the IT pack is under some bit of selling pressure. Nestle India holding out. Tata Motors, some green on the screen, some respite. Of course, after that UBS affirmation of sell call, the stock did come under intense selling pressure. But private banks holding out, IndusInd Bank, Kotak Bank and the likes. TCS from the IT pack also holding out. But what's not doing well is Divi's Lab. That's the top Nifty loser. Adani Enterprises, no big cuts, but 1% lower on that stock. Adani Ports as well. But some of these other FMCG names like ITC under pressure. You have Asian Paints also under pressure. Looking at the market open, Raja, what would your top trading picks be for today?
Yeah, so what I would like to do is I would like to go in with a long in TVS Motors, because I find that the auto space, like you rightly mentioned, the likes of Bajaj Auto and the likes of Hero Moto, they are all, the two-wheelers are doing well. So I would go with TVS Motors with current levels, buy at current levels with a stop at 2810 for a target towards 2860. And I would like to
Okay,
also go in with a cash segment. I would like to go in with a buy in ICRA with at current levels stop at 6500 for a target towards 6825.
Okay, those are the two recommendations. But what would you do with the Tata Motors after the recent sell-off? Today showing some bit of green on the screen. But would you view
Yeah.
that dip that we saw recently as a buying opportunity?
See, at the moment, Tata Motors is definitely not on the cards. The reason is that the sharp decline that we have seen is only seeing some bit of recovery here, and it is not some buying. So I would wait and watch and see how this move unfolds, because it's not a dip to buy into. So I would wait and watch, because the momentum is definitely set for some more decline. So I would wait for some revival and wait for a move above 1050 to really take any action.
Okay, so wait for the level that Raja just mentioned. But since we are talking about Tata Group of stocks, Tata Power is in focus because it has signed and the Tata Power Renewable arm has signed an MOU with Tata Motors to set up 200 fast charging stations for electric CVs. Look at the movement on Tata Power. It's not very far away from its 52-week highs. It has done well over the last 5 sessions as well. Could it make a dash at that 470 level anytime soon? Would you be looking at trading into this one, or would the strategy be to accumulate it at current levels?
See, Tata Power has definitely been attracting some attention, but the thing is that Tata Power movement is always a little sluggish. So now, over the last few days, it has shown some revival. But then I would wait for it to clear 465 levels, where I would get more clarity on the further course of action. Because once it clears 460 levels, it opens up doors towards 500. Otherwise, again, we'll get caught in a range, and that's something which I want to avoid at the moment.
Okay, that's the view on Tata Power. But Patanjali, group of foods is in focus. There's been a large trade in the counter, 3.3% equity worth 2,222 crores. have exchanged hands at the rate of 1889 per share. Of course, the floor price was at 1815 rupees per share. It's higher than the floor price. But let's look at what the stock is doing. It's down 3% at the current juncture. 1871 is where it's at. If you look at the last 1 month, the stock has gained 5% or thereabouts, but last 5 sessions it has been a little sideways and iffy. Anything that you are spotting on the charts? Any interesting levels here?
No, I would like to skip this stock because this stock had a very extended run in the last 3 months. So there was some profit booking envisaged. So I would not be a buyer in this particular stock at the moment. I would look for support levels which is closer towards 1750 region. Then I would take a call in this stock.
Okay, then let's shift focus to some of the viewer queries that are trickling in this morning. I spot a query on RBL Bank for the short term. This one is coming in from Itoop. Wants to know your thoughts. RBL Bank, within the banking pack, last 5 sessions it has gained somewhere around 3%, but if you look at the 6-month performance, the returns have been fairly negative, and it's just coming off its 52-week lows as well. Is this stock an avoid within the banking pack, or is it a trading play on the shorting side?
Yeah, Nandita, you have answered my query yourself because the stock has been declining in the entire year. So I don't think that one should be looking at such stocks because the market is looking to head higher, but this stock is heading to set to head lower. So it's an avoid, and I would not be a buyer in RBL Bank. It's purely a trading stock on an intraday basis, but then still there are many more candidates which you can take advantage of. So it's best to avoid this stock.
Okay, avoid RBL Bank. I hope that answers your query. Srivardhan Gupta wants to know your thoughts on first source solutions for the short to medium term, and he wants some kind of level for a new entry. First source has done well, given double-digit returns in the last 1 month. But would you look at this particular stock from the mid-cap IT basket, or would you ask them to look at something like a Persistent or a Coforge? And if at all you see an entry point here for this particular stock, do tell us about that as well.
Yeah, so currently the stock is undergoing some consolidation. The overall momentum is very much positive, so one can continue to hold on and expect higher levels. So if you have the capital, the dips towards 290 also would offer a good opportunity to initiate further longs.
Okay, that's the view on a first source. But before I move on to the next query, I want to ask you about IRCTC. I know we keep discussing railway stocks pretty often, but there is news flow around this counter, and LIC has raised its stake by 2% in this stock between December 2023 to September this year. Of course, we've seen some bit of cool off in some of these railway names. We talk about whether it's a buying opportunity or not. But would you advise waiting for some dip to come in, some more dip to come in rather, for the likes of an IRCTC before taking positions?
Yeah, the stock under discussion has already declined considerably, and it has come to some good set of supports at around 925. So I could look for buying into this counter with because the stop is very close at hand at 925, and at the current levels, it presents a good opportunity to initiate long. And yes, like you've said, it's at a make or break stage, so one has to be careful and treat this stop with care because a breakdown below 900 levels could accelerate the decline here.
Okay, that's the view on IRCTC. The next query is coming in from Pooja. Pooja Khanda. She wants to know your thoughts on GIC RE. She bought it at 398 rupees, and she wants to know the way forward in terms of stop loss, at what levels she should accumulate more, and the target prices to watch out for here. GIC is at 390 and her buy price is at 398. So she's in the 392 rather. But in the last 1 month, the stock has been fairly sideways. Should she accumulate now or wait?
So you should not look to accumulate it at the moment. The momentum is still waiting for some upside. So once it crosses 405 would be a point of accumulation. Your stop would be below 370.
Okay, that's the view then. Uh, Utsav Jain is wanting to know what would be the best pick to buy right now within the bank Nifty pack. Of course, we spoke about the likes of RBL Bank, we spoke about HDFC Bank, but if one were to ask you, to give out one or two picks from the entire banking space, which ones would you ask our viewers to consider?
See, I have already answered the query earlier in our segment when I said that HDFC Bank is the best bank to bet on. So, if you are looking to buy the banking pack, then HDFC Bank will be the best bet to take forward the initiative of investing into the banking segment.
Okay, reiteration on an HDFC Bank. But the next query is coming in on a BLS International. This one is coming in from Vinod Patange. Wants to know if it's a buy at current levels. Your thoughts?
Yeah, BLS International has been in the news and the stock continues to do well. It has been showing some steady acceleration and there are frequent pullbacks in this counter which are getting bought into. So I would say that this is a good stock to invest at the moment. And I am seeing a target towards 750 within the next 3 years.
Okay, I hope that answers your query. But the next query is coming in from Satya CK. Wants to know your thoughts on Granules India. Now, this stock has been in the throes of a sell-off. It's been the new entrant in the FNO ban list also for today. Satya wants to know the ideal entry point with a view for over the next 1 to 2 years. Is it the right time to buy given the fact that it has shaved off quite a bit in the last two sessions?
Right. So the news flow that has emerged and the consecutive sell-off which is emerging is so this is not a good time to get into this stock. So any decline that emerges is not a buy on dip. Right now, this is coming down on some negative news. So news is very important, and if there is a negative news flow, then it is best for some dust to settle down before getting into that. So now, if I were to look at some kind of supports, so the first level of support is around 532, where it is traversing now. Now we need to see after nearing those levels what it is doing before us taking an entry. That's the whole idea. So if it is unable to hold 530 levels, then the next stop is only closer towards 465, 470. So I would wait and watch, wait for the dust to settle down on the news flow, and then take the next step of action. So these are two support levels. If it bounces off from the support level mentioned around 530, then one can consider buying into it. But then the caveat is go slow and don't go all in.
Okay, go slow. That's the view on Granules India. I hope that answers your query. The next query is coming in on IRDA from Prabudh Bhatia. Now, this is one stock that had seen a stellar run, and if you look at the last 6 month returns, it's in excess of 80%. But that up move has cooled off. We've seen the stock correct quite a bit from 310 levels, which happens to be its 52-week highs. But in the current scheme of things, what should one really do with this stock?
Yeah, the way the price movement has happened, it has clearly, it is now testing the support levels at around 232. So it has broken it and it is trying to recover. So there is some confusion happening at those levels. So unless that is resolved, I should be not looking into this counter because the overall momentum is definitely on the sell side and there is some exits happening here. So it will not be a good point to enter it right now.
Right. Okay, that's the view then. But a couple of more queries to go. What are your thoughts on SBI now within the PSU banking pack? Because we've seen PSU banks coming under pressure. SBI has itself seen quite a few downgrades to its target prices as well. So should one switch to a private lender if one is holding on to SBI right now? And private,
Yeah,
when I say
so
private lender, of course, the stocks that you already mentioned.
yeah. So the thing is that amongst the bank nifty movers, one of the you know the bastion is from the private banks is HDFC Bank, and the other from the PSU is SBI. Now, in contrary to HDFC Bank, the charts of SBI are definitely showing some more weakness here, and the weakness is the yesterday's rebound has just brought in some short covering, and I don't think there is some genuine buying emerging. So I would wait a while before the momentum thrives above 820. Unless it crosses 820 levels, I would not be a buyer in SBI, because at every rally there is going to be some sell-off emerging.
Okay, that's the view then on SBI. But with that, we've come to the end of the query segment. And Raja, I would like to thank you for taking out time and joining in this morning and sharing your thoughts with us, and also, of course, helping our viewers navigate with their queries on their stock holdings, etc. But hope to see you again next week. Have a great weekend.
Yeah, bye.
Well, with that, let me bring on board our next guest for today. Joining me, Shibani Kurian, who's the head equity research and fund manager at Kotak Mahindra AMC. Shibani will be just joining us in a bit, but let's see what the markets are doing at the current juncture. Okay, there has been some bit of intensifying of the weakness that we saw at the start. The Nifty is now down almost 80 points or thereabouts. 0.3% lower for the Nifty. 25,300 is where we are at. For the Sensex as well, we are seeing a 250 point cut, but the Nifty mid cap index is managing to hold out in the green. And the advance decline ratio is also in favor, or strongly in favor of gainers at the current juncture. So broader market showing strength, but the benchmarks have cooled off after hitting fresh highs yesterday. But 25,300, that's pretty much intact as of now. Let's take a look at some of the stocks that are actually on the losing end and maybe weighing in on the index. Asian Paints, that's the top laggard, given the fact that Brent crude is now back above that $72 per barrel mark. So, that is putting some bit of pressure after slipping below that $70 mark. It has rebounded almost $3. So, that's putting some bit of pressure on, the industry that kind of depends on crude as its raw material. So Asian Paints down. Divi's Lab closed second, 1.2% lower for that one. ITC, Hindustan Unilever, so some of these FMCG names also under pressure today. Bajaj Finance under pressure, so is M&M, LTI Mindtree, SBI Life, Bharti Airtel, Tata Consumer, Eicher Motors. These are some of the other laggards. In terms of gainers, metal counters are shining bright today. So Tata Steel, JSW Steel, Hindalco, these are the names that are among the top Nifty gainers. Tata Motors, some bit of relief for the counter after few consecutive days of sell-off post UBS's sell call. Wipro continues to gain. Bajaj Auto continues to forge ahead. Nestle, although other FMCG names are under pressure, Nestle is bucking the trend. Power Grid, IndusInd Bank, NTPC, SBI also in the green today, and of course two-wheelers, as I mentioned, doing well. So Hero Moto also among the gainers. But let's see whether we are able to touch base with Shibani once again. Shibani, is my voice reaching you?
Hello. Yes.
Hi Shibani, is my voice reaching you?
Yes, somewhat audible now. Thank you.
All right, Shibani, welcome to the show right here on Money Control. Just want to ask you, as we step into the all-important Fed meeting next week, do you think we could see some bit of or some more weakness on the index, because yesterday was a very strong short covering rally, right? Would you call it a one-off move, or would you say that Indian markets would continue to see a march towards record highs even before the Fed starts cutting interest rates? What are your thoughts, given the fact that yesterday we saw a surprise rally come in on in the markets?
Yeah, hi. So, if you look at Indian markets per se, in terms of the drivers of market, both macro as well as earnings, has been largely intact. However, our markets have had a great run, and therefore, if you look at our markets compared to emerging markets, valuations do appear to be higher than long-term averages. There are, of course, as you mentioned, few important global factors to look into, and Fed being one of them. And we will have to wait and see what the Fed does in their next meeting this month. Also, notice that if you look at the quarterly earnings trends that have come through for our markets, earnings have been largely in line with estimates so far. However, for the first quarter, the earnings estimates itself were somewhat muted. Now, given that the consensus earnings outlook for FY25 is still double digit earnings growth, there is a need for earnings to pick up, specifically going into the second half of the year, which coincides with the festive season. Now, in that context, for our markets which have performed so well, especially on a comparative basis, it is but natural to witness some degree of volatility. However, our belief is that as long as earnings and macro remain strong, especially in a relative context, markets should remain fairly well placed, specifically in the medium term. And any volatility would be, we don't expect to see any major sharp drawdowns in the market, given the macro parameters being intact.
Okay, don't expect a major drawdown, but given the fact that there has been a sector rotation happening in the market, right? So in that sense, do you think it's time to increase your exposure to defensives or even banks for that matter, because banks have underperformed thus far, right? So should one move to private banks in particular and increase their allocation, because anytime we see some bit of sell-off coming in the market, we see the FMCG, pharma. These are some of the pockets that come to the rescue. So if people are, people have under ownership in these particular sectors, is it the right time to move to these sectors now?
Yes, so you're right that if you look at sector perspective, there are three key sectors that we are watching out where relative valuations remain fairly attractive. So overall, our thesis is that the entire theme of manufacturing, industrial infrastructure, which is a segment that has done very well over the last few years, from a medium-term perspective, the structural thesis remains intact, though at the margin in pockets, valuations have become expensive. From a valuation perspective, like you asked, there are three segments that we are watching out for. First is the entire consumption basket. Consumer as a space, specifically mass consumption, has underperformed over the last few years. There are signs of pickup in terms of rural wages, and the monsoons as well as food sowing data seems to suggest that rural wages should start to incrementally inch up, and inflation being under control also helps. And therefore consumption is one segment that we are evaluating specifically in context of where market valuations are. The second segment is the large cap technology space. The Fed rate cut should also help in terms of bringing some amount of macro stability back on track, specifically where the US is concerned. A lot of the discretionary spends which have been absent should start to trickle through, specifically going into next year, which should aid in terms of revenue growth where technology is concerned. The third aspect, like you pointed out, was the private sector banking pack, where valuations look extremely attractive. However, there are a few headwinds in the near term, with loan growth slowing down, credit costs somewhat normalizing, and margins which could see some pressure with interest rate cuts. But however, if you take a slightly medium term view where banks are concerned, risk reward from a valuation perspective does appear to be favorable. So, from an overall perspective, these are three segments that we believe incrementally where risk reward appears to be in favor.
Okay, those are the pockets to actually look at. But what would you do with auto ancillaries now? Because in light of guidance cut from major players, global players, most of these auto ancillaries have quite a bit of exposure to names like BMW, right, who've slashed their guidance. Could that have a major impact on earnings going forward? And in that light, how should one approach this particular pocket?
Yeah, so the auto anch space, clearly, again, this is a segment which has done well both in terms of earnings as well as price performance. There could be some near-term impact because of the slowdown in demand, specifically Europe. But couple of things to note where the auto anchs, specifically the domestic auto anch players, are concerned. One, they are gaining market share even in the global context. Secondly, overall content vehicle continues to rise, which also helps in terms of supporting demand. From a domestic perspective as well, the replacement cycle should also help in terms of supporting demand. And the fourth aspect is that many of the auto anch players have diversified their revenue streams, and therefore that helps in terms of offsetting some near-term hiccups in some pockets. The other thing to note is that from a margin perspective, margin tailwind should largely continue and margin should hold up in a stable band. And therefore, while there could be some near term impact because of slowing down in specific pockets, specifically Europe, as you alluded to, but the overall thesis where the auto anch space is concerned continues to remain fairly intact. And our overall view on the segment remains positive.
Okay, overall view on auto anks remains positive, but I want to ask you particularly about an Indigo. It was known to be a low-cost carrier, a lean, mean machine, so to say. But now, of course, there's been a major shift in strategy, right? With it introducing business class and another layer of loyalty points, etc. So, do you think these modifications or this shift to strategy, elongates its runway for growth? Do you see a huge runway for growth here? Because if you look at the other players like SpiceJet, who are struggling to survive, Indigo is one name that, of course, has the leadership in terms of market share as well. So, going forward, how are you viewing the aviation space and particularly Indigo, especially due to the shift in strategy?
So unfortunately, I will not be able to comment on a specific stock or a company. However, let's talk about the sector per se. The sector is a classic example of consolidation, where, as you know, that the top player commands a significant market share, and now the top two players are largely the entire sector in terms of market share. So this consolidation bodes well from a long-term perspective, specifically where yields are concerned. Structurally, we also believe that the demand trend in terms of passenger growth should continue. And while there may be some seasonal variations here and there, the trend in terms of demand growth should continue. And as many of the players expand specifically into international markets where margins and overall profitability is better, the consolidation in the sector should help the larger players benefit. The crude coming off is, of course, an icing on the cake. So, from that perspective, the Indian aviation space appears to be fairly well placed, given the kind of trends that we have seen in the last few years.
Okay, any emerging themes or any contra themes that one should look at now, given the fact that we are at record levels, half of the market is extremely expensive, and some of the FMCG names, if you talk about them, their PEs are in excess of 50 times. So what is it that one should really look at when it comes to valuation comfort? Talking about emerging themes or contra themes that you feel one should look at now.
So, when we look at valuations, one must, of course, look at valuations in context of earnings growth, in context of return ratios, as well as look at valuation parameters with relative to history. So, a specific number may not be the right way to look at valuations, especially across sectors. Sectors which have very high ROCE profile would typically trade at multiples which are higher than some of the other sectors where the ROCE profile may be inferior to that extent. So one has to keep that in mind. So if you ask me in this market, a couple of things that one needs to watch out for. The markets have seen significant rally and therefore outperformance in the relative context. In this market, we believe that quality over momentum, stocks which are trading at reasonable valuations, good quality companies are well placed. The second factor is that from an overall perspective, there has been pockets where low float stocks, where stocks where liquidity has been low, have run ahead of their earnings, and therefore multiples have re-rated far in excess of earnings. And that is a pocket that we would be careful about. In terms of contrarian theme, one theme that we believe should play out is the entire revival in consumption, specifically the mass consumption, both in terms of urban and rural, which has been absent since the post-COVID upturn that we saw. As we were earlier discussing as well, that if you look at rural income, there are signs of pickup in terms of rural income, monsoons, the food sowing pattern, as well as the fact that input cost pressures are abating with lower inflation, means that incrementally rural wages should start to move up, and that should aid consumption at the mass segments across both rural and urban segments. So that's something that we are watching out for. And in that context, the festive season will have an important part to play in terms of seeing how the revival plays through over the next few quarters. So, from a contrarian perspective, that is one large theme that we are looking out, which can be played through consumption, through two-wheelers, through segments such as two-wheeler financiers or auto financiers who are present in that segment. So, across the board, discretionary consumption players which are in the mass segment, these are some of the themes that we are looking at from a contrarian perspective.
All right, those are the themes to watch out for. But with that, Shibani, I would like to thank you for taking out time and sharing your perspective with us. Appreciate you taking out time, and I look forward to interacting with you again in the future sometime.
Thank you so much. Pleasure being on your show. Thank you.
Thank you. Well, with that, the markets haven't really gone anywhere since my last market check, down 40 points for the Nifty, but the mid-cap index is managing to hold out. And, the advanced decline ratio is firmly in favor of gainers. But with that, we've come to the end of this edition of Opening Bell. Would like to thank you guys for taking out time and joining us, and also, sending us your queries. Keep doing that. We'll try and, get them addressed as much as possible. But of course, weekend is here upon us. Have a great one. But before that, come back and join me on Closing Bell at 3:30 p.m. where we talk about all the stocks and the setup for next week as well. Stay tuned to Money Control for all your other news and updates from me and the entire team. Thanks a lot for tuning in.